Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Give us just a moment here to go live on all the different platforms, but today we're going to be going through our live mortgage rates, and then we're going to be doing our deep dive topic of one-time close construction loans, which is an amazing opportunity here and definitely some great programs. Appreciate everybody tuning in nice and early. See the comments coming in there. Looks like we're live on all the platforms, so we'll go ahead and get started. We'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. You can also drop any questions you have in the chat as we go through the presentation here today. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our actual live mortgage rates for a few programs. Then we do a deep dive into a different loan type, and today's loan type is going to be one-time close construction loans. Amazing topic here. I'm sure Jose has some great options for us to check out. But first, let's look at the rates. So, Nick, if you're ready, let's pull up today's rates and check them out.
All right. So we will compare today's rates for all of our standard programs. It is October 3rd, just after 11 a.m. Eastern. So all of our initial rate sheets are out for today. And we will compare the APR. And if you'd like a full breakdown and itemized loan estimate that breaks down all the fees that go into the APR, please get with one of our team members. They'd be happy to send that over. For the demos, we'll always use a standard scenario so we can compare across all the programs. We'll set up a single family home, 500,000 purchase, 400,000 loan amount, corresponds to 80% loan to value, 20% down payment. We'll set an estimated 760 FICO credit score and an estimated 40% debt to income ratio. So with those settings, as we do every day, let's check out the rates. First up, our 30-year fixed conventional option, typically the most common option people think of when they're thinking of a mortgage. Rates as low as 5.875 today. Final APR comes in 6.159. Again, these are about 1 year lows, right about the same as it was yesterday. Now, if for any reason our customer doesn't qualify for a conventional option, we typically want to present an FHA option as well. FHA allows more leniency on credit issues and a higher debt to income ratio, but does require upfront and yearly mortgage insurance. FHA comes in today 4.99. Final APR with all the fees and mortgage insurance, 5.924. So we compare that to conventional. If our customer qualifies for both, they may want to consider FHA if they're willing to do the mortgage insurance. And our customers that need to use it, great option here. And our VA programs are only for eligible vets and active service members. If you are eligible, these programs are definitely amazing. Rates as low as 5.125. Final APR with a standard funding fee, 5.426. And notice if our customer qualifies for VA, definitely going to be a better option than FHA or conventional. So great option for our vets and service members. And the final standard option that every banker lender has is USDA. USDA is only for USDA eligible properties, which is the rural areas of the country. If the property is eligible and our borrowers eligible, these are great programs to compare. Today comes in at 4.99 rate. Final APR with the fees included, 5.716. So as usual, if our customer is shopping in those areas and they're comparing to an FHA, USDA is going to be a touch cheaper typically. And same thing with conventional, going to be a touch cheaper than conventional. So great option for those properties in those rural areas. And that rounds out the standard options. If our customer doesn't qualify, many banks or lenders will have to deny them. But here at the Mortgage Calculator, we have 5,000 additional options, starting with our non-QM alt-doc options. So if the customer doesn't qualify using tax returns and standard documentation for conventional FHA, etc., we can switch to alternative docs such as bank statements, 1099s, P&Ls, all kinds of different options. And today, bank statements come in at 6.125 rate. Final APR 6.425, within about 0.3 today of conventional. So great option for our borrowers. Almost identical cost there to switch to alternative documentation. And we can use alt docs for investment properties and all kinds of different options for investment. So first up is the alt doc. Again, bank statement are similar. 6.625 rate today. Final APR 6.951. And we'll compare that to the other investment options. We have our conventional option. Remember, there are no government options, so no USDA, VA, or FHA. But conventional comes in today at 6.375 for an investment property. Final APR 6.710. So as typical, it's a touch cheaper than a bank statement option. But what is not typical and excites us here at the Mortgage Calculator, we have our DSCR options, no income, no employment needed, that can beat our conventional options, which is amazing. So DSCR stands for debt service coverage ratio. We don't need any income or employment info. We simply use estimated rents from the appraisal to determine a DSCR ratio. If the estimated rents could cover the estimated expenses, that's a positive DSCR ratio, aka the property will cash flow. And this is our option with a 3-year prepayment penalty here. Rates as low as 6.25, final APR 6.578, so squeaking out conventional a touch. And we can sweeten the deal even more with a 5-year prepayment penalty on some programs. Rates come down to as low as 6.000 today. Final APR 6.297. Again, beating conventional. That is amazing. And we have our no prepayment penalty option, as some states don't allow it, and some investors prefer not to have one. Rates as low as 6.65 today. Final APR 6.951, which is a touch higher than conventional, which is typical. But I'd still say 100% of investors would choose a DSCR when the costs are very similar. And the final 2 options we go over every day are second mortgage options. So many of our customers have a first mortgage that is lower than what we're seeing here on the presentation and want to keep that first mortgage in place, but want to access their equity, get some cash out. Typically, a HELOC is the only option, but we have our 30-year fixed second mortgages now, which are a little bit superior for most borrowers to a HELOC because they are fixed instead of adjustable and much lower rates. So for a primary home, we can get cash out, rates as low as 8.125. Final APR 8.527. And for an investment property, we can use the same program to get cash out without touching that first mortgage. Rates as low as 9.25. Final APR 9.572. And these are both non-QM programs. We can use bank statements, P&Ls, and similar. Let's get into our topic for today. Again, our deep dive topics are typically the types of quotes that we can't present on our live pricing demo here, because they are very unique. So one-time closed construction loans, definitely very unique. Jose talked about renovation loans yesterday. These are going to be, instead of renovating a property, we're going to build a property from scratch. So remember, a renovation could be even a property burned all the way down, but there's still a foundation and there's still, a registration with the city for a property that was there. We're going to rebuild. But when we're talking one-time close, we're talking empty ground that then we build a new home on and a new foundation and issue a new certificate of occupancy. So a little bit difference there between a rehab, even if it's like complete rebuild. If there was a house there before, that's still a rehab. If it's just bare land, now we're talking one-time closed construction. So let's explain how this works here, Jose, and then check out some actual options.
Yep. Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. So we previously discussed the renovation loans, which Nick was just mentioning. So now this one is the ultimate dream, right? So you can't find your dream home, but you found that parcel of land in the neighborhood that you would really love to live in. So this is the option that makes your dream a reality. This is the one where you can buy the land, build the home, all with one loan, and then that loan, that's what they call it a one-time close, because the loan, once the construction phase is completed, then that loan transitions to the end loan, the permanent loan on the property. That's why they call this loan construction to permanent loan. It starts off as a construction loan and then transitions to the permanent loan when the construction phase is complete. Now, maximum construction phase on this is 12 months. So you do have to have all of your variables in order. The plans need to be completed and probably approved already, because it could take 6 months to a year in some cases for plans to be approved. And if they're not even created yet by the architect, that could take some more time if it's a custom-made home. So plans need to be approved. You definitely need to have your contractor already lined up, because in a one-time close loan, just like in a renovation loan, we have to approve the contractor. We have to approve the construction, in other words, the budget and everything that's being done. And we have to approve the borrower's credit and income as well. So 3 components need to be approved. So you can't just say, let me apply for a one-time close loan, let me get the loan, and then let me put all those variables in order, because then your 12-month build period would expire by the time you have your plans in order, and then you're ready to apply for the loan, and then now your 12-month time is up. So definitely everything has to be completed up front. And that's usually the biggest challenge, is not the credit and income of the borrower, but the contractor and the logistics of having all the paperwork, including the plans and what are going to be the permits and all those items lined up. So let's go and get into the examples we have for today. Now, the one-time close is possible for a purchase for all agency loans, and then it is possible for a rate and term refinance, which is a very interesting option for a conventional loan. So I'm going to share all of those with you now. First option we have here, the USDA one-time close, which this one is especially attractive because not only is it 100% financing here, but great rates. As you can see, not much of a loan level price adjustment when you are using the one-time close option combined with a purchase. So here, the other thing to consider on the USDA one-time close, that it does allow for double wide manufactured homes to be purchased and attached permanently to the land. So it has to be a new manufactured home, can't be a used one, has to have never been attached anywhere. And then, you buy it from the manufacturer, they transport it to the site, and they put it together and attach it to the foundation. That's the construction phase of it. So very good option there at a 6.75 lowest cost option at par, and 5.5% being our lowest rate option for our USDA one-time close 100% LTV purchase option. Now VA also 100% LTV on the one-time close, rates equally as good. And great news, you can also purchase a brand new manufactured home under the one-time close loan and have it also put together on site and permanently attached to land. So this is probably good news for a lot of borrowers out there. I get this question every now and then. So now everyone that's watching here, you are empowered to know that this is the most amazing deal out there. So we're looking at 7.125 lowest cost option, almost at par. And you can buy that down all the way to 5.25% interest rate at a cost of 2.449. FHA one-time close loan also allows purchasing a manufactured home and attaching it to the land via the one-time close option. Also, imagine this, a 1 unit or a 2 to 4 unit property. Also, so a lot of options here with FHA and your one-time close loan. Now, you will notice rates are a little bit higher, obviously, in the one-time close than in the regular financing, because essentially when you borrow with the one-time close loan, they essentially, if it's a 12-month construction phase, they are locking in your rate for 12 months. That's a very long extended rate lock. Hence, pricing is a little bit higher. So 8% is your lowest cost option at a cost of 0.875. And you can buy that down to 7% at a cost of 2.25 points. And now for our last purchase option before showing you the refi option is our conventional one-time close purchase, 95% LTV, 8.75 lowest cost option, 8.25 lowest rate option. Now for this particular one-time close option for conventional loans, manufactured home purchase is not possible with the conventional option. So USDA, VA, and FHA, yes, manufactured home with the construction loan, conventional, no. For whatever reason, the conventional one-time close option was pretty restricted when we started having issues with the pricing. So it is a little bit less liquid in pricing than the GSEs that are government related, like VA, FHA, and USDA. They go through Ginnie Mae. They're a little bit more liquid in secondary. So they were able to maintain their more options in the one-time close loan. Conventional, not as much, but we can still do it. 95% LTV, and you're looking at 8.75 lowest cost option and 8.25 lowest rate options. But just do be on the lookout when you are structuring your one-time close loans for conventional properties, because they do have also, in some of the cases, restrictions on site built homes, right? Where they may accept only other types of homes, but not a site-built home. So do look for that restriction. And our last option here is the one-time close rate and term refinance up to 95% LTV. Conventional is the only option that offers a rate and term refi for the one-time close loan. The GST other agency options do not offer it. Conventional does. So it's great because if you got that piece of land just sitting around already paid off and now you want to build a home, that's where you do the limited cash out refi rate and term conventional, and you can get the home built. 8.75 lowest cost option at a cost of 1.75 points, and 8.25 is your lowest rate option at a cost of 2.5 points. So again, be the dream maker for your borrowers out there, and let them know this is possible. Also let all of your realtor partners know that all of these possibilities with the one-time close construction to permanent loan, as I'm sure they're out there struggling trying to find property for their borrowers or trying to find ready built homes for their buyers, whereas they may be able to find some nice beautiful lots in the area where they want to actually live, and then you can facilitate that with the one-time close loan.
All right, perfect. Okay, I don't see any questions, so we'll go ahead and wrap it up. Absolutely amazing program there. So remember that we do this show at 11 a.m. Eastern every weekday, where we go through our live rates and then do a deep dive into different loan types. So we'll be back tomorrow with a new loan type, and we appreciate everybody tuning in.